Hello, my name is Josephine Dijkstra. I'm from Sweden and I'm an intern at Moat Investings. I will later be joined by Eddie on the valuation side of the presentation. Today we are going to present Moat Investing's analysis of Kahoot. First we will be presenting the business and then our view on potential upside. We have previously covered Kahoot in a video, and since the stock price has gone up more than 50%, we do still believe that there is a potential for more upside, since the stock is relatively unknown to investors, and especially American investors. As we can see from the picture, the stock price went down a few weeks ago, and this was because they missed their guidance earnings by 100k, but it was also because of lack of transparency. People were questioning whether they have organic growth or not, since they've been doing many acquisitions. We now know that they do have organic growth, and also that they have 400 million in cash to proceed with further acquisitions. The implied revenue by the market for 2022 is 162 million, which will be quite easily achieved, and this year's revenue target will also be achieved, since it's not even taking into account the acquisition of Clever. As I said, growth is not an issue to Kahoot, and they should instead focus on integration and creating synergy by integrating the platforms with one another and understand how to monetize them. Kahoot has a unique business model, and that makes us not regard the current share price as expensive. And on top of that, they have a free cash flow conversion that is great considering the state of growth that they're in. Many millions of users are just now adapting to the platform, and their paid subscriptions will contribute to recurrent revenue, and we should treat this as a SaaS multiple. The content on the platform is created by teachers, so Kahoot doesn't have to pay for anything of that, and the teachers can easily create and share their content and improve their classes. They can also sell their content on the Kahoot platforms, something that is unique and can create viral effect. So a bit about the company. They're a learning platform, and they aim to be the global leading educational platform. They're using games to reach a higher engagement in the classrooms. They are targeting students, teachers, parents, and companies. They have more than 9 million teachers on the platform as of now, and 97% of the Fortune 500 companies are on the platform. Even before COVID, the learning environment was changing, and this is something that Kahoot is taking great advantage of. They're also very clever in the way that they work, since their users are going to recruit more users. For example, a teacher will make a quiz for a class and then have all of their students register to participate in the quiz, and in this way they will have millions of registrations every month. The ecosystem is also clever because it promotes usage across their platforms. They're also now trying to scale up their apps and content by including more languages like simplified Chinese and Arabic. I'm now going to go through the different areas of Kahoot, like Kahoot at home, Kahoot at school, Kahoot at work, and academy. Starting off with Kahoot at home, this segment aims at home studies and learning at home. You can use it for revision and preparation for exams, for example. They have more than 10 million users who have played 100 million games. Some of the applications included in this segment is Drops, Dragonbox, and Poyo. With Drops, you can learn a language in a fun and interactive way. They have more than 30 languages. With Dragonbox, you can learn mathematics and algebra, and this is a great app, and it has won several prizes in the mobile gaming industry. With Poyo, you can learn how to read, and the kids are encouraged to learn by exploring and playing games. By the last quarter of this year, they're also introducing Kids, which is integrating content with characters from Disney, Marvel, and Nickelodeon, for example. This will make it more fun for the kids to learn, since they are recognizing the characters. This is something that is also very appreciated by parents, since they can have their kids learn while playing games. This is why Kahoot at home is a very important segment to Kahoot, as more of the learning is taking place at home. It is also very interesting that all of these applications are platforms by themselves, but one will lead to another, and this increases the network effect and the product ecosystem of the company as a whole. Kahoot at School is targeting institutions, students, and teachers, and already more than 10,000 educational institutions have acquired a multi-user license for their teachers. Inside this segment, we can find KEDU, and also soon Math Labs by Dragonbox is launching. They're also offering Whiteboard.fi, which is a solution to distance learning. The teachers can have their lessons through this application, and all of the students can access it through their own device. This is great since 62,000 teachers in the US are saying that they will be working remotely or hybrid by the end of this year. This is a great opportunity for Kahoot and it seems to be setting them up for success. Kahoot at School is offering a free version, but there is also a premium subscription, which is $5 per teacher per month. This seems to be a popular option since they already have close to 300,000 paid subscriptions. Kahoot at Work is used for training, development, working, as well as building company culture. They do this through facilitating engagement and communication. The app that is used is called K360, but they're also offering a premium plan which is called 360 Spirit. This plan includes Actimate, Motimate and Drops. It starts at $6 per employee, and with more than 400,000 paid subscriptions already, this is the biggest segment of Kahoot so far. Kahoot Academy is a marketplace where educators can sell their content to other teachers, institutions, parents or students. The content can be anything from tests, quizzes to rich media content. This is great to Kahoot since they have specialized content uploaded to the platforms at no cost, and it will help them generate revenue. Some of the top shareholders of Kahoot are SoftBank, Microsoft and Citigroup, but also one of the chairmen of Kahoot has bought shares and now has a meaningful position in the company. He bought the shares at 110 Norwegian kroner, which is more than double the current price level. As I said before, there was a price drop to around $4 due to a lack of confidence because of poor investor relationship management. The market had some question about Kahoot's growth, but also some worries about their inexperience. This has now been cleared and it has been reflected by an increase in price. I also mentioned that the network effect and the product ecosystem of Kahoot are some of their strengths, and we see them as a moat, and this is why we think that Kahoot is still undervalued and that there is a potential for upside. This is also what makes them a multibagger. These are our numbers for the discounted cash flow analysis, but I will now give the word to Eddie that is going to present our valuation.
Hello guys, my name is Eddie from Moat Investing, and as you know, we are always looking for multi-baggers at reasonable prices, and in previous videos and articles we have discussed our favorite way of approaching subscription-based companies, as we believe there are really important and critical metrics that should be taken into consideration when it comes to these kind of businesses, like for example the churn rate, the retention rate, the ARPU, the customer lifetime value, the cost of acquisition, and so on. However, we're still missing the information to properly calculate these values for Kahoot, and we will keep an eye on future calls to check that data. In the meantime, we cannot let this opportunity pass, so we have approached Kahoot with a DCF model relying on a 10% hurdle rate and a 3.5 terminal growth value, assuming also a 30 million capex per year, as you can see, and as well as a modest negative contribution from delta working capital. These assumptions, we believe, provide enough margin of safety as we think Kahoot will generate better cash flows going forward as compared to our own projections and estimations. That is because, again, this is a subscription-based company, so the growth could be perpetual and continual. It's not the same when you have a just one-time user than when you have a subscription-based platform where each user pay every month or every week, every year, depending on the license that they have. So please, after you have liked and shared this video, go to the description down below, click on our article on Seeking Alpha. So there you can have more details on the valuation side, including the full DCF model and some important insights about the multiples that I know you're already thinking of them now.
This is a sensitivity analysis where our assumptions of a 10% discount rate and a 3.5% terminal growth rate is in the middle of the table. By looking quickly at the table, you can get an idea of what the share price should be using your own assumptions. One of the risks that we see is the lack of information to calculate customer acquisition cost, customer lifetime value, and the churn and retention rates. If we have this information, we can better understand the value of the company, but also better understand the growth opportunities that they have in the future. Secondly, there's a risk with the integration of the acquisitions, whether they will achieve synergy and natural growth or not. Thirdly, we should keep an eye on the competitors like Google Classroom and Moodle. It is, however, more likely that Google would choose to acquire Kahoot than compete with them. Another possible acquirer would be Zoom, since it would help them diversify and they have plenty of cash. Lastly, we should keep an eye on inflation, since if it goes up, it could have an effect on our valuation.
We believe Kahoot is a multibagger and it can grow to be the world's leading educational platform. So even though the current stock price and our conservative estimates seem to be coming to the same level, we still believe that Kahoot has a lot of more growth to come, especially since we are not factoring yet the value of Clever that is still under the acquisition process. They are also building some competitive advantages, so they will have a moat in the future, a strong moat, and those when it comes to product ecosystem and network effect. Also, their cross-hub capabilities and how they integrated platforms can help to improve their revenue per paying user. So thank you guys for being here. Don't forget to give us a like, activate the notification, and share this video with those investors interested in Kahoot. And if you would like to dig deeper into the story, go and check our Seeking Alpha article again, and see you in the next time. Bye bye.